Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NETSTREIT CORP quarterly report. NETSTREIT Corp offers a range of businesses and services through its internally managed real estate investment trust, REIT. The company specializes in acquiring single-tenant net lease retail properties nationwide, focusing on high-quality properties leased to e-commerce resistant tenants with healthy balance sheets. Key services include acquiring single-tenant net lease retail properties, managing a portfolio of high-quality retail properties, generating consistent cash flows and dividends for investors. These services are led by a seasoned management team of commercial real estate executives, aiming to create the highest quality net lease retail portfolio in the country. The surge in NETSTREIT Corp's stock price by 26.4% in the past year can be attributed to several key factors. The company's strong Q3 2025 earnings beat, which exceeded analyst expectations, was a significant catalyst for the rise. Additionally, record investment activity and increased guidance demonstrated the company's confidence in its acquisition pipeline. The successful capital raising of $209.7 million through a follow-on offering and additional financing commitments further strengthened NETSTREIT's balance sheet, enhancing its financial flexibility. Positive analyst ratings and price target increases from reputable firms such as Robert W. Baird, Bank of America, UBS Group, Wells Fargo & Company, and Mizuho also contributed to the stock's growth. Finally, insider confidence was demonstrated by CEO Mark Manheimer's purchase of 56,000 shares of NETSTREIT stock, increasing his ownership by 1.8%. These combined factors have collectively propelled NETSTREIT Corp's stock price to increase significantly over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. The main contributors to revenue growth are the increase in rental revenues due to the expansion of the real estate investment portfolio, increased interest income from mortgage loans receivable, and higher net gains on sales of real estate. Additionally, a significant increase in fixed and variable lease income, net proceeds from ATM programs, and acquisitions have also contributed to revenue growth. Revenue decline. On the other hand, there are no explicit drivers of revenue decline mentioned in the summary. However, it is noted that decreases in provisions for impairment and net gain on sales of real estate may be contributing factors. Net income and profit margins. A turnaround story in a remarkable turnaround. The company's net income surged from -$6,576 million in 2024 to $5,610 million in 2025, marking an impressive increase of plus $12,186 million. This significant improvement was driven by several key factors. The profit margins also saw a substantial boost, rising from -5.5% in 2024 to 3.9% in 2025. This notable increase can be attributed to the growth in revenue, which jumped by $23,800 million, 19.8%, in 2025. Meanwhile, total operating expenses remained relatively stable, increasing by only 0.005%. The company's improved financial performance was underpinned by several key drivers. The addition of rental revenues from portfolio growth and increased interest income from mortgage loans receivable contributed significantly to the turnaround. Furthermore, a decrease in provisions for impairment and employee severance also helped to boost net income. Overall, these factors combined to drive a substantial improvement in the company's financial performance, resulting in a significant increase in net income and profit margins. The company is indeed generating positive operating cash flow, as evident from its net cash provided by operating activities of $80,701 for the 9 months ended September 30, 2025. This indicates a healthy financial position and ability to meet its short-term obligations. The company's debt level and interest expenses have undergone significant changes over the past period. The total debt has increased from $868,261,000 to $1,096,612,000, a rise of nearly $229 million. This increase is attributed to new borrowing capacity under the PNC credit facility, which added $1.4 billion to the company's debt level. Additionally, the gross mortgage indebtedness has risen from $0 to $8.1 million. Concurrently, interest expenses have also seen a substantial increase. The 3-month period ending September 30, 2025, witnessed an interest expense of -$12,636,000, up from -$7,965,000 in the previous year. This represents a significant jump of $4.6 million. Furthermore, the net interest expense increased by $14,985 million from -$21,749 million in 2024 to -$36,734 million in 2025. These changes indicate that the company's financial situation has become more burdensome due to its increasing debt level and higher interest expenses. Management's outlook and strategy overview. The company's management is optimistic about its outlook and strategy. They focus on tenants in industries where a physical location is crucial for sales and profits, with a 99.9% occupied portfolio and an average remaining lease term of 9.9 years. To mitigate risks, they have hedged $200 million of the 2031 term loan at a fixed interest rate of 4.59%. They also expect to continue growing their assets held for investment with a weighted average capitalization rate of approximately 7.6%. Management anticipates rising general and administrative expenses, but expects them to decrease as a percentage of portfolio ABR and total assets due to operating efficiencies and economies of scale. They are continuously assessing the company's portfolio to improve returns and manage risk exposure, leading to increased rental revenues and interest income. The management believes that their cash flows from operations, available borrowing capacity, and future share issuances will be sufficient to support ongoing operations and fund debt service requirements for at least the next 12 months. However, they acknowledge market risks related to interest rate fluctuations, which may impact their future income, cash flows, and fair value. Acquisitions and divestitures overview. The company's financial summary reveals minimal activity in terms of acquisitions. The only notable mention is an adjustment for intra-quarter acquisitions totaling $2,691. On the other hand, divestitures show a mix of losses and gains. A loss of $132,000 was recorded in the 3 months ended September 30, 2024, while a gain of $1,122,000 was reported in the same period of 2025. These transactions are related to the sale of real estate assets. Overall, the company's acquisitions and divestitures have been relatively limited, with no major deals mentioned in the provided financial summary. That concludes the financial summary for NETSTREIT CORP. Feel free to comment below, and I will be happy to answer them when possible.